BeatStars.com. 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 BeatStars.com.
All right, welcome to the stream. Eric was the first one here. Shout out to my man Eric. Thank you for joining. I'm Bren. Welcome to Trades by Bren. First trade of the day winning. First trade of the day winning. We start with 4 points. Picked up about 4.5 points on the open here. Simple 50% pullback. Higher low double bottom. Simple. This is a trading range. We moved down into this area, bounced out, found a bottom. That's bottom number 1. Next time we moved down into this area, we bounced out again, right? And next time we came close to this bottom, we bounced out again into the open. So that gave us 2 consecutive bull bars here. Okay. So as soon as I saw this second bull bar, I put my order 50% pullback. I'm working on a video right now explaining this strategy, because this strategy is not actually in my document that I've shared with you guys. So I put my order right here. How did I know that that's where I should put my order? Because this is trading range price action. Look, we went up and then we went almost all the way back down. Okay. So that's a trading range, right? Ranging, right? As opposed to something like this, where you're in a trend. Okay. So trend, range, different rules for different ways that the market is behaving. If you look at the chart, the first thing, I don't know if it's the first thing, but one of the most important things you got to determine is whether the market's in a trending environment or the market. Thank you. Sorry. So let's say that again. Trend, right? Trend. Why? Because it's in a continuous direction. You guys know up, you guys know down. This is stuff you already know. Okay. Continuous direction, right? Continuous direction, that's a trend. So the rules for how to trade this are different than the rules for how to trade this. Okay. So I sit down, I look at the chart. In a few seconds, I say, you know what? I know we went down yesterday, heavy, and then we bounced out. Okay. Why? Because I bought here and I got this spread right here, which was a really nice profit. About 15 points profit, I think I made on that. Maybe a little more. So that was awesome. But what you can see here is that after a trend, often you get a trading range. That's usually how the market goes. Okay. So if you've got a lot of trend and then you have a strong move in the opposite direction, and then you have a strong move in the opposite direction again, now this is the perfect opportunity for you guys to understand the difference between a trading range and a trend. Because on this side of the chart, you've got a trend. That's a trend. Okay, that's what a trend looks like. It's in a continuous direction. If we go to a higher time frame, this is a 5-minute. Let's switch to a 15-minute. It's even more obvious. Look, that's all bear bars. Bear bars on my chart are black. On your chart, they're probably red. And look, the whole time we went down, there was one bull bar in that whole series of bars. Okay, continuous direction. So the rules for that are different than the rules for a trading range. So this is one mode. Think of them as modes. The market's in 2 different modes. It's like gears. Okay. If the market's in trending mode, then you have to trade it a certain way because it's moving in a continuous direction. You only want to be on one side of that trade most of the time. Now on this side of the chart, we've got the opposite. We've got a trading range. Okay. So if the market's in a trading range, my strategy for that, okay? And if you go to the link on this on the screen or go to the link in the description, tradesbybren.com/3setups, my strategy for trading ranges is to buy low, sell high, okay? Buy low, sell high, and scalp, okay? So if the market's in a trading range, I'm scalping, okay? I'm scalping. We're gonna put that in orange because that's kind of a neutral color. Now, what does that mean? That means we have to understand where the trading range is. So how do I determine where the trading range is? You go from the low to the high and you see where it reversed. Okay. So it reversed there. So that means there's the trading range. So let's draw a box that we can make translucent or transparent rather. Okay. So if that's our trading range, and my strategy for a trading range is buy low, sell high, well, where's low? Low is in the bottom half or the bottom third. Better to buy in the bottom third. Okay? So we know that the trading range, this is that halfway mark. So this would be high and this would be low. Okay? So that's my main idea for understanding trading ranges, my main strategy, right? Number two is I need confirmation. I need to see buying pressure down here, okay? And then number three, I need to see some type of double bottom or triple bottom or wedge or some kind of bottom, okay? So that's what this is. This is a higher low double bottom. Higher low double bottom. Okay. So why is that a higher low double bottom? Because we found a bottom once here, right? A bottom means a bounce. Boom. Right? So there's one bottom. And then we came right down into that area. This area again. Remember I said it's not support and resistance lines. It's the support and resistance areas. So we came back down into this area again. And we bounced again. And as soon as I saw that happening, now we have a higher low double bottom. Because that's one bottom. And that was the previous bottom. Okay? Higher low double bottom. Then as soon as I see this breakout, this is a breakout. These two candles closing above all these candles to the left. You know, good amount of candles, right? Like after this candle, we closed above all those candles. So if you're breaking out above 10 or more candles, something like that, that's a decently strong breakout. Plus, you've got two consecutive bull bars with both closing past their midpoint. Yep. And the second one growing in size and closing on its high. This is showing momentum to the upside. This is buying pressure. Okay. So my setup in this case, if I'm scalping, is to put my order at 50% of this breakout bar. So that's what I did. And I did this. I don't know if I did this on stream or maybe I did this right before I started to stream. I'm not sure. But either way, I measure the distance of this bar and I find the midpoint. Midpoint was right here. And then I watched it for a few seconds and I tried to see if we were getting momentum to the downside or if it was holding. And it seemed like it was holding. So my order was right here. I executed that order and it went and tapped in my order using a limit order. And then I looked at the ATR for my profit target. So my profit target was 10 because the ATR was about 10 at the time. However, it started to stall right around the moving average. So I decided to call it there and I closed the trade for, I don't know, 4 or 5 points, something like that. So quick money. Quick money. First trade, one win. We're off to a good start, baby. It's crazy. You spend years learning how to make money quick. And it takes years. Don't get it twisted. It takes years. Man, that feels good. To be able to see a chart in a few seconds, understand what's happening, understand the game being played, place a trade and have it go your way, make money. That's the dream, baby. What's better than that, huh? Trades by brand. We're grateful here. We're grateful here, man. You know, you see these other traders on YouTube. They're all arrogant, talking about how great they are. I'm just grateful. Let them talk about how great they are. I'm just grateful. You understand? I'm grateful. I'm grateful for the privilege and the opportunity to be able to look at a screen, click a button, and make some money. What's better than that? What's better than that? And if you guys only knew how much I've struggled to learn this, if you guys only knew how hard I've worked to be able to do that in like 5 minutes. This is hard work, guys, but it's absolutely worth it. It's absolutely worth it. It's hard work, but it's absolutely worth it. And I stand by that. For me, okay, for me, I'm only speaking for myself. Your mileage may vary. I don't know your work ethic. I want to show you guys something. The man in the arena. It's not the critic who counts, not the man who points out how the strong man stumbles. You know, like a trader when you lose. People on YouTube point out how you lose it, right? Those people don't count. It's not the man who points out how the strong man stumbles or where the doer of deeds could have done them better. No. The credit belongs to the man in the arena. The man who is actually in the arena, whose face is marred by blood and dust and sweat and blood, who strives valiantly, who errs. Yes, I make errors. Who comes short again and again. Or we get short and make money. Because there's no effort without error and shortcoming. There's no effort without error and shortcoming. But who does actually strive to do the deed? Who is the one actually doing the deed? Is it you? Who knows great enthusiasms, the great devotions, who spends himself in a worthy cause, who at the best knows in the end the triumph of high achievement. And who at the worst, if he fails, at least fails while daring greatly, baby. Ow! Yes, that's what I look at every day. That's what I look at every day. I got so excited I slipped. All right, and another strong bull bar. Okay, it's a good morning, y'all. Now let's get refocused. Still in this training range. So trying to break out though, tight channel forming. How do I know? You just draw that line, connect the lows. And we're making higher lows and higher highs, right? So that's a bull channel. And that's a tight channel because the bears aren't even getting consecutive bars here, right? But we're in a trading range environment. That's why I have this box marked. So as long as we're in a trading range environment like this, we can expect a lot of reversals. Although the bulls are looking very strong. So we'll see what happens here. If there's sellers up here, because we're in a trading range environment, there will likely be sellers up here. There may not be, but we're gonna see right here how strong the bears are and how strong the bulls are. And the bulls are definitely trying to overtake the bears. They're making progress, but we'll see if they get followed through. Yeah, guys, I usually don't take a trade that quickly, but when it's there, it's there. That was the entry, and I was going for 10 points. And I would have gotten 10 points if I would have held through this pullback. But I'm actually glad I exited because I entered that trade as a scalp. One of the most important things that I've learned and that is hard to discipline yourself to do is you have to enter knowing the difference between a scalp and a swing. Okay, between a small profit target and a big profit target. And one of the temptations for new traders, something I have worked on a lot, and something I used to do all the time, but I really don't do anymore, is when you get into a trade and you go for a small profit target and then the trade starts working and you get excited and you drag that profit target out. And you go, actually, I'm going to go for a big profit target. Usually that will cause you to lose money. If it doesn't cause you to lose money, it'll cause you to become unstable mentally. A lot of things in trading will cause you to become unstable mentally. Okay, so bulls looking strong. I like this area for longs because I was watching this very closely yesterday and I was trading this. And I bought around here and I got this move up like 20 points or something. It was crazy. So there's definitely buyers down here. Hey, shout out to my man Val. Val representing SoCal. What's up, my man? Shout out to my man David. Thanks for being here. Shout out to my man Devin. Shout out to my man Eric. You were the first one here. Shout out to my man Oso. Oso, we're trading the SP 500 futures. It's on your screen. Top left-hand corner. I also put it in the title of this broadcast. I thought you knew, man. All right, so this is a stop order. Okay, this is called a stop order. Stop order setup. This is going to tell us some key information if the bulls get followed through here. They did. So that means the bulls are in control. And look at the market exploding to the upside. Although look at 9. 9 is a weak doji candle, although it went down and then closed on its high. So that's a pullback. Notice sellers coming into this area. Why? Because we're in a trading range environment. That's why. So bear selling near this high. Again, trading range environment. Why? Because we went up and then we went down. Let's have a look at the daily chart. So this is the daily chart. And I marked the trading range here, but we broke that line. So what do we got to do? We got to adjust. Okay. If the low's here, maybe the trading range is here. Although, I don't know about that. Maybe here. Maybe here. Looks like it might be more like here. 5,000 psych level. Okay. You guys know about big round numbers? Psychological support. Size support. Psychological support. Traders need psychological support. All traders need psychological support. Who the hell would try and attempt this crazy ass this crazy ass game, man? Risking losing money. Psychological support. So 5,000 is a psychological support level. But right now we're heading up. Okay. So let's see what happens here. I'm tempted to sell above here. But I'd rather sell up here, right? Remember, buy low, sell high, scalp. So if this is the top of the trading range, then we would want to sell in this area, right? We're not really there yet. The bears sold here previously. Am I right, Val? Am I right? Big round numbers are also psychological support, right? So I'm joking, but also there's something to be gained there, which is that big round numbers often they're magnets, right? Support and resistance are magnets. And now we're in the middle of the trading range. And trading ranges spend a lot of time in the middle. So you can expect this to kind of hang out in this area. Or blast through it. I mean, let's see how strong the bulls are. If they keep getting consecutive closes, then we have to continue to see this as bullish. Man, what a great trade that was. I gotta tell you guys, it's very fulfilling to walk in here and start off with a win, with a quick win. It's easy to get reckless though if you're not careful, so. Next time I think I'd hold my stop there, but I'm okay that I closed that one out. Trading is fundamentally disappointing. In case you haven't noticed. There's always something you wish you would have done differently. So it's good to just accept that. Right? I got in here. I got out for about 5 points. Could have had 10 points. But guess what? I didn't know that was going to happen. Right? You see that we paused here. So I took my profits. That's cool. If I'm scalping, that's consistent with exactly what I entered thinking. Okay, so let's do our checklist. We're a little bit behind schedule here. I like to do my checklist, and I like to mark the high and low of the day, whichever's closest. Let's mark both actually, because both are in play here, I think. Okay, so exactly what you'd expect to happen here is happening because we're in a trading range environment. You'd expect the price to go 1 or 2 ticks above the prior high and then sell off. But how much progress are the bears gonna make? How much damage are the bears gonna make? This area here, the bulls were taking profits and then they were buying again lower, which was very interesting because it looked like we were going down and we were losing momentum, but they were just gaining momentum. So that's a small pullback bull trend, which looks weak, but it's actually strong. So it's important not to get tricked. Trading is filled with all these little tricks. The market's filled with all these little tricks. The trick and trap new traders. And you gotta know about the traps. You gotta know about the traps. Because if you know about the traps, then you can play the opposite of the trap, right? Like right here, for example. The bulls look like they're gaining momentum. So you go, okay, get in long. But are they? Right? Or like this, for example. Okay? This is some kind of trap because you see a big bull bar like this, and if you're a beginning trader, you see this and you go, oh my God, how could we do anything but go up after that much momentum to the upside? That's a 20-point candle, I think. Let's measure it. That's an 18-point candle. That's nuts, right? So you see an 18-point candle and you go, oh my God, the buyers are strong. There's an explosion to the upside. And so you buy here. And then as soon as you buy there, the market dumps and you lose very quickly. So that's an example of a trap. So you got to watch out for these traps and you got to know where they are so you don't get tricked. Okay, so this is a stop order. And the fact that the bears are selling here shows some strong momentum to the downside. Although, let's see if they can close strong. They're not closing strong. This right here is what was happening all along here. This is what I was talking about just a moment ago. The market was going down. The market was going down, and then bulls would buy down there. And then they keep pushing it up. Notice that this looks similar to this. So you've got lots of tails on the tops of the candles, and you got lots of dojis. But we just keep working higher, keep working higher. This right here was a 35-point move up, but it happened real slow. If you're watching this, like it started pretty quick, but then it just kind of slowly drifted up, and it just sort of like drifts up slowly. And if you're long, when that's happening, you just be patient. That's all you do. Okay, so I like to sell one tick above a bear bar. So my entry would be here if I was getting short, okay? And I would go for the ATR. So I put my mouse here. I'd look at the ATR at 7.6. So that means I go for 7 points. All right. So I'm going for 7 points like that. Or you can go for that, which would put your profit target at 6 points. And if you went for 6 points, you're good. You're good on that. But starting to see some momentum to the downside into the close here. Look, 20 seconds on the candle, 22, 21, 20, 19, 18, 17, 16, 15. So the last 10 seconds of this candle are going to tell us something. Are the bears going to continue to sell into the close of this candle? Or are they going to start buying? If the bears are selling and then they start getting out of their shorts, that means they are buying into the close. And that creates an opportunity for the bulls, right? So that's a weak close, isn't it? Didn't even close past the midpoint, or maybe just barely at the midpoint. Just barely. Okay. So if I was a bull and I see that, I might be buying that, thinking the bears are weak. And that's exactly what's happening. Bulls buying there, exploding to the upside. Why am I not interested? Because I got this area marked. It's the middle of the trading range. I'm not fucking with this area here. Took 5 points. Yeah. Yeah, Val, you get it. It's not, I wouldn't say it's noise. I don't believe in that. I know people say that. I don't believe in that. I'm an Al Brooks student. I'm a very dedicated student of Al Brooks. And Al Brooks says, people say noise means you don't actually, it's just an excuse for not understanding what's happening. Which I believe. I believe that. It's kind of a harsh statement, but he's also a genius, so. Sometimes when geniuses say harsh things, you go, yeah. Okay. So I don't believe in noise. Because think about it. This is his argument. And Val, you can tell me if this is something that makes sense to you. He says, how would it be noise if there's buying and selling? If the market's open, there's buying and selling on every candle, right? That's what you're seeing. And they're buying and selling for a reason. They're not buying and selling for entertainment. They're not buying and selling for just to amuse themselves. They're buying and selling with an idea and an understanding about what's happening in the market. Right? The algorithms are programmed by human beings with a logic, with an understanding about how they're interpreting the chart. So that's Al's argument, which is there's no such thing as noise. Like saying it's noise it's like saying it's meaningless. But how could it be meaningless if there's institutions, banks, hedge funds, if the market makers are buying and selling, they're buying and selling based on a strategy and an understanding, an idea about what they think's happening in the market. That's logical. So noise is like saying it's illogical. It's just chaos, but it can't be noise. If you think about it from that perspective, you can't be noise. So that's why I don't believe in noise. Now, practically speaking, you could say, yeah, there's just not much happening. It's, We could say noise for just like a linguistic convenience, but I'm with Al Brooks. I don't believe in noise. And it is an easy excuse to just say, I don't actually understand what's happening. So you don't have to look. You don't have to try and further your knowledge and understanding of what's actually of the game that's actually being played. All right, rant done.
Why are you so antisocial? Because I'm trying to get it. Why are you staying on the basketball court so much? Because I'm trying to get it. Why are you out there practicing in the hot sun when ain't nobody else out there? Because I'm trying to get it. Why are you not clubbing? Like every time I text you and invite you to go do something fun and cool, you always studying? Because I'm trying to get it. Let me tell you something, homie. These women ain't going nowhere. These clubs, these parties, all this shit ain't going nowhere. The more weird you are is a reflection of how committed you are to focusing on your shit.
That's what I'm talking about. Bulls owning the chart right now. Bulls absolutely owning the chart right now. Okay, so I pointed this out. Yeah, Val, there's not much liquidity, right? But there is liquidity if there's trading happening. And you can choose to actually challenge yourself to understand what's happening, even if the market's in, a range, and even if it's flat, and even if there's not a lot of action. There's still a way to understand what's happening because there's still a game being played, and that game is logical. Okay, so a stop order setup. Okay, and my man Hefe or Jeffy is asking about this. So this would be a long stop order setup. Now, when you see a stop order, okay, setup. This is a stop order setup. Why? Because it's a strong breakout, and a stop order would be you'd set your order above that breakout, strong breakout, breaking out to the upside, strong momentum to the upside. You'd set your order just above that, and you would execute a long position here, okay? Right where I've got this arrow. Now, if that long works and the market continues working higher, what that tells you is that we are in a strong trend. Another way of looking at this is gaps, okay? So a stop order setup here that fails to break to the downside in any serious way, okay? So in other words, you get a small pullback and then it just keeps going. Or it just keeps racing higher, right? Either a small pullback and races higher, or it just continues to race higher without even the pullback. But the pullbacks can get there eventually, right? But either way, another way of looking at that is gaps, right? You guys heard of gaps or fair value gaps? Notice the gap. Here was the high, okay? And then look. You guys see this gap here? So what that shows you is that we broke out to the upside, then we came down, and the gap is basically helping you analyze the strength of the opposite side. So a stop order means that the buying is strong to the upside, a long stop order. And if you see a very clear and obvious breakout to the upside, and then we continue working higher, that's a signal that the market is in a strong trend. That means that the trend is very strong. So that's one way of analyzing whether or not the bulls are in control. The bulls are in complete control right now. Okay. So that's one way of looking at it. Now, another way of confirming that is with the gap. So this was the previous high. Yes, previous high. Now what happened? This candle broke out above these highs. That's called a breakout to the upside. Okay. Now, after the breakout, you will have a retracement or a pullback. Retracement or a pullback. And when that pullback happens, that pullback is either going to come back close to where that breakout point is, which is here, right? We broke out of here. Okay. So we broke out of here. This is the breakout point. And then the market came back to that breakout point or very close to it. And then what? You're going to watch what happens there. If the market comes down and comes to that breakout point and then bounces off it or doesn't even get there, then that leaves a gap. And that's how you get a gap. And that gap tells you what? Some call this a fair value gap. Why would they call it that? Because that's basically saying that the bulls have decided that the price above this level is fair. That's the fair and fair value, right? Why would people buy? Why does anyone buy long? Because they think the price is going up. So that if there's buying here, more buying here, then that means that the bulls think this is fair. Okay. Which gives you a potential long here. However, we've got this high to test, which we're coming up to test clearly. And we've also got this high to test. So there is a gap. There is a gap showing you that this is a strong bull trend. The stop order succeeded. Okay. Stop order succeeded. Breakout point. Test of breakout point. Okay. Test the breakout point. Failed. Now, gap. We'll just say failed equals open gap. Okay. Open gap. That's what that means. That's another stop entry. Okay. So the same thing. Get another stop entry here. Long. Now I'm tempted to short this, but I will not. Because I have a rule, which is never short a strong trend until first you get a break of the trend line and second, a retest. And if you've seen my short that's about to crack 1 million views, then you know about that rule. People like that rule. That video's got almost 1 million views. Crazy. Let's get rid of this. Now imagine I bought down here. We'd be 22 points up right now. Woulda, coulda, shoulda. Woulda, coulda, shoulda. I do not convert scalps to swings. I do not, if I go into a trade seeing a small profit target, I do not change my mind once I'm in the trade. I take my profits and then I re-enter if I feel like it, if there's reason to. Not if I feel like it, if there's reason to. All right, let's pick that energy up. Ow! If you're just joining us, welcome to Trades by Brand. I'm Brand. Thank you for being here. I appreciate you. Appreciate you attending. Appreciate you joining the live stream. We do this every Tuesday and Thursday, 7 a.m. Pacific. We click buttons. We make money, at least we try to. But the thing we really do is execute our process according to our rules and procedures, because that's our job as a trader, and we know that. Make sure to like and subscribe. Hit the links in the description if you're curious about the platform I trade and you want to give it a try. And if you're not ready to trade real money yet, you can trade with a prop firm like Top Step, which I do. Okay. Sometimes I trade my own account. Today I'm trading my own account with my own money, but sometimes and often I will trade. I'm a funded trader with Top Step, so I will use them. You can get a link in the description for them if you want to check them out. Or if you just want to start with trading simulated, right? Using the trade simulator, paper trading. You can do that with TradingView, which is a platform I'm using right now. And there's a link in the description for that as well. Okay, so check that out. Also, 3 rules of the chat. If you've been here before, you know them. Guys, you've heard the rules of the chat about 1,000 times. So I want to ask you for your help. We are a community here. It means it's not just about me, it's about all of us, okay? And I can't build this community just by myself. You guys are the community. So we're in this together, guys. We're in this together. So help me out. Put the 3 rules of the chat in the chat. Put the 3 rules of the chat in the chat box. Someone do that that's been here before. My man Val, David, one of you guys, help me out for the newbies. Let them know the 3 rules of the chat. Bulls running shit. Bulls running shit. That's the Bulls. That's the Bulls right now. We're running with the Bulls, guys. Okay, 3 rules of the chat. Number 1, introduce yourself and your city upon entering. Number 2, good vibes only. Number 3, talk to each other, not just me. Why? Because we're building a community. That's why. Shout out to my man Michael from San Diego. I'm from San Diego, Michael. I'm in Carlsbad. How about you? There we go. Trending. I want to see what happens when we get here. It's another stop order. Very cool, Michael. Thanks for being here, man. Make sure you check out my 3 favorite setups at tradesbybrand.com/3setups. That's also how you get on the mailing list. So I can let you know when I'm live streaming. And you'll also be able to check out my 3 best trades. I love this track. Bulls completely owning the chart right now. Absolutely dominating the bears. Absolutely dominating. Market usually tries to reverse on bar 18. Bar 18 we are 10 minutes away from, so let's see what happens as we come into this area. Daily chart. That's a lot of momentum to the downside. Look what you done. Look what you done. Look what you done. Look what you done. My man David, thank you for your help. Guys, 3 rules of the chat. Perfect, David. Absolutely perfect. Thank you. I appreciate you, dude. Let's pin that comment. Look what you done. Oh, what you done. There you go. We pinned it, Dave. Thank you. So bulls buying low, pushing price up. Bulls bought close. Okay, so they're buying closes. We know that. They're also buying 50%. So bar 15. Okay, they're buying above 50% actually. Where's that 50%? Let's see. Let's measure it. It's about 50%. Okay. So that was the same entry, right? That was the same setup that I took down here, right? Remember, I explained this to you guys. If you're just joining us, this was my entry this morning. Okay. I say, okay, big breakout, trading range price action, buy 50% pullbacks of breakouts, right? So I see this breakout bar, this guy, bar 4. I put my order 50% right at the midpoint of that candle. Okay, that's what I mean by 50%. So notice the same thing happening right here. Bar 15, right? We measure the midpoint. Look at where the bulls bought, right there. Okay, so you can see that this is a strategy that institutions are using. How about that? The candles tell you a story. If you can see what the candles are telling you, you can participate. That's what they're doing. $12, $13, $14, $15, $16. 1, 2, 3, 4, 5 consecutive bull bars. Check it out. 16, midpoint, put your order 50%, boom, you're making money. Beautiful entry. God, I love trading when you can just get in, get out, make a quick profit, and leave it at that. This trading thing's real stressful. At least it can be. And it is often. So when you can just get in and get out real quick, that's good. I would like to have more swing trades though. You know, more trades like waiting for an hour or two. So I have a scalping strategy, but I also have a swing strategy. And for that, I would go for a measure move. So that would be here to here, right? Or actually more like here to here. Okay. Which will put my profit target here. And look, it looks like we're coming up to test that, right? So if I were to make that trade, I would get long here and go for that profit target right there. So we'll see if that would have worked out. I think it probably will. I mean, no sign of the bear slowing down, but we're moving now into this resistance area. So we're gonna have to wait and see. But so far, so good for the bulls. Bulls running. We are running with the bulls this morning, baby. Running with the bulls, aka buying long when the market's trending up. Okay, someone was asking about Bitcoin. Yes? Who's asking about Bitcoin? Wow. Okay. So Bitcoin, 4-hour chart. This is a chart I've been marking up. I shared this with you guys on social media on the community tab. If you want to get this chart, go to the community tab on my channel. Okay. Now, first I had support here. And we found support there. Okay. Boom. Okay. But then we broke this support. I said, I wonder where we're going to find buyers. So when that happens, when the market breaks what you thought was support, you adjust. Okay. So now we go to the next logical area of support, which would actually be here. Okay. First it's here, then it's here. Okay. But we broke below that. So then what do? You go to the next logical area of support, which is here. Okay. So I'm going to take this support line and I'm going to move it down here. Why? Because we found support right here. Okay. So that makes sense that that's the next area of support. So we move that here. If you haven't seen my 3-step tutorial for how to draw trend lines, go watch that. Absolutely go watch that. I explain exactly this right here. And I show you a real example of how you have to draw your lines and then see what the market does and then make adjustments. Very key point. Let's clean this up a little bit. Okay, so we got support here. Now we've got a double bottom. Okay. Similar to what's happening today. Look. Higher low, double bottom. See that? Why? Because this low is higher than this low. Okay. So that's one feature. Higher low, double bottom. Okay. And now we're getting some momentum to the upside. However, what do you also have? Bear trend. Okay. So there was the bear trend, and the bear trend line is getting broken. This also got broken. So we can take that off. But now you have a wedge as well. Okay. So higher low, double bottom, also wedge bottom. Wedge bottom, right? Because 1, 2, 3. Okay. So momentum starting to push, but still in an overall trending range. Okay. So if I was buying Bitcoin right now, I could be buying Bitcoin right now, but I would have rather bought down here or maybe here. Okay. And then going for a scalp. So let's say you go for a scalp on this candle, right? What do? You put your stop here or here, your choice. And a scalp's going to be 1-to-1. Okay. Or less. Okay. Basically, you want to look at the average candle size. And if the average candle size is, 3.8, then we want something like that. Okay. So alternatively, if you want to be more conservative, you can put your stop here. Okay. And go for 1-to-1. So like that. Right. That'd be a scalp. So bullish at the moment, but in this trading range. Now possible, because we found a bottom here, we see a bounce to the upside. Okay. But you've got all this selling here to contend with. Very similar to what we're seeing on the ES, right? Notice you've got selling to the left. Okay. You've got a trading range, right? Okay. And then you've got higher low double bottom. Oop. Right here, higher low double bottom. Let's see if we can find a wedge. Yeah, we've also got a wedge too. Look. Wedge. 1, 2, 3. Or 1, 2, 3. Okay. So wedge. Wedge. Higher low double bottom. Higher low double bottom. Consecutive bull bars. Consecutive bull bars. Very similar. Interesting, isn't it? Two completely different instruments. Bitcoin and the SP500. So different. But same patterns. which is why what I teach and the strategies that I follow are found on all instruments, which means Bitcoin, Ethereum, SP 500 futures, NASDAQ, Forex, stocks, whatever. It's the same patterns. Sounds so beautiful, don't you agree? Bull's still running. Look at that. Bear close. Okay, 1, 2, 3, 4, 5 consecutive bull bars. We get one bear bar, little tiny doji, and what happens? Bulls buy it immediately. If you bought here on the close of that candle, market races 7 points immediately. It's fantastic. It's kind of like an FU candle, sort of. Bathroom break. And we're back. Bull's still running shit. Bull's still running shit. That's what we like to see, man. Running with the Bulls this morning. Ow! Remember, I do not fade strong trends until we get first a break of the trend line and a retest of the bottom. Until then, I'm bullish. Take a couple notes. If you guys aren't journaling your trades, what the hell are you thinking? Check 1, 2. Good. Mic's on. Excellent. It's 8:30. 8:11. Bought 50%. Four. Mark my words. Oh. Do a little screenshot. There you go. Entered. Scout. So exited as scout. Closed early for 5p when hitting resistance at EMA. Mark my words. Ow. Throw that screenshot in there. And that's how you grow every day. That's how you learn and grow every day. Right? You got to make sure that you are tracking your results. And you got to make sure you're journaling your trades. Key. Key. So key. Starting to go sideways here. But the bears will need to get more off than, I mean, look for consecutive bear bars. That's a good clue, right? Have the bears gotten 2 consecutive bars on the chart? No. In fact, they have not gotten 2 consecutive bars on the chart since what? Bar 2. That's an hour and a half of sustained buying. Look for 2 consecutive bear bars. They're black on my chart. You don't see them. That means the bulls are running it. The bulls are completely fucking owning it. That's also a stop order. It's another stop order setup. Meaning you can buy above it. And if it succeeds, which we have reason to think it will, although we could be starting to form a trading range, it's just the data doesn't support that. The data supports long. That's what the data shows. Trade what you see. And what are you seeing? I don't know what you see, but I see a bull trend, baby. I see the bulls running shit for an hour and a half straight. This is buy the close. Meaning if you just wait until that bar closes a couple seconds before you buy, most likely you make your money. 50% strategy also still possibly in play. Life is good. God is good. Trading is good. Okay, so for an hour, I've been saying, I want to see what happens when we come up here. So let's see what happens when we come up here. $14 points above the moving average. Will the bears sell at new highs, or will the bulls continue to buy at new highs? Look to the left. That's a lot of selling. Major trend reversal. That's what that is. An expanding triangle. Expanding triangle equals major trend reversal. That's that. Great track. Will we get that measure move? Yeah, I think so. I mean, there's been very few times that we've had a strong breakout like this in a major trend reversal that we haven't gotten a measure move. The market loves these measured move profit targets. That's this guy here. Sellers here. Profit taking here. Of course. But look at the close. Best the bears could do. That's not even bear strength. That's bull taking profits. You do have a wedge now, right? Wedge top. Like there or here. But there's just no sign of bear strength at all. No sign of selling pressure at all. Every time the bears get it closed, the bulls rip. Right, so those are actually the best entries here. There's a... Oh. There's an entry long. You buy bear close. Buy bear close. Buy bear close. See that? Long, long, long. Racing to that measure move profit target. That would be the move. Note that this is not the high of yesterday, but it's the most recent high. 20 points. Nuts. No Discord for the time being. Bears selling where they sold yesterday. All right. So we're definitely past the 2-hour mark, guys. And it's been a good session. I'm going to try and make a couple more points here. See how that goes. But that's going to wrap up for the live stream. Thank you for being here. I appreciate you. Make sure you come back every Tuesday and Thursday, 7 a.m. Pacific. Much love. Brent signing off. Peace.